AI doesn't panic. And in finance, a little panic isn't always a bad thing to do.
So the application today is multifaceted.
So today it's not just worth investing, saving, borrowing. It is also even understanding how your own money habits can be multiplied using artificial intelligence.
The tipping point was the 2015-2016 eKYC through through Aadhaar.
How often do they follow your advice to the T?
Who does the client actually refer to in times of market volatility, right?
Nearly 10 years ago, I had a conversation with a wealth platform CEO. I asked the question, will a robot soon be your financial planner? Nearly 10 years since that chat, and this is increasingly looking like a reality. Even back then, it wasn't out of the realm of possibility. Robo-advisory had already kicked off. But that's still a far cry from some of the applications that are already being used. What are the problems that are being solved for right now? And what are the solutions that AI is already giving? And where do human advisors slot in to all of this? Will they become redundant? This is a question that we're asking on Moneywise on NDTV Profit. My name is Alex Matthew. Joining me in studio is Varun Fatehpuria, the founder and chief executive officer of Daulat Wealth Management. He's the man who gives people financial advice. And to speak on the other side of the spectrum, which is artificial intelligence, and everything technology, I've got Kanishk Gaur, who's the founder of India Future Foundation. Gentlemen, thanks so much for taking the time. You will both represent different blocks on this conversation, and I'm hoping for an enriching conversation. Since we're talking about artificial intelligence, though, let me toss the baton first to you, Kanishk. Can you tell me how different today's technology is compared with what we were seeing even 10 years ago, just so that we can set the context for this conversation?
Thank you, Alex, for bringing me in. See, today, artificial intelligence in personal finance has moved beyond just the flashy chatbots or credit score calculators. Right now, it's embedded in almost every part of consumer financial experience, often which is invisible. You've got robo-advisors like Wealthfront or Betterment using machine learning to allocate assets as well as user goals, income, and risk tolerance. At the same time, you've got passive investing platforms like reinforcement learning to adapt allocation over time. There are also smart budgeting tools like Think, Clio, Yanap, and Bankiv native apps, which are using machine learning technologies and classic AI models to categorize transactions and detect anomalies and help people tailor their savings. One more key thing is that AI is also used in powering fraud detection today, where we see a systems of unsupervised learning to flag any kind of outlier behavior. For example, suddenly your credit card gets misused somewhere globally where you have not visited, even underwriting your credit scores and then basically helping you manage your financial scoring and meet your goals like payments, education, utility, and even social media signals to assess the credit worthiness, which is more inclusive. So today, it's not just worth investing, saving, borrowing. It is also even understanding how your own money habits can be multiplied using artificial intelligence.
So that sets somewhat off the context, but I want to come to you, Varun. A decade back, we were still talking about robo-advisors. So we've come a long way since that point. But you yourself have been in the industry for a while, so you've seen some of these changes occur. Can you help us understand how things have changed, both from your perspective as an advisor, and also from the perspective of the individual, that is the investor or the saver?
Sure, Alex. I think a lot of what Kanishk alluded to is a multifaceted approach to AI, where it is not just covering wealth and investments, but also AI is being used to, uncover credit checks and borrowing and so on and so forth. So the application today is multifaceted. But specifically, if I want to talk about wealth in general, so we need to rewind the clock back a bit, right? Let's go back to 2008, 2009, post-2008 financial crisis in the US, where the rise of these wealth tech apps actually came into the picture. And the reason for that was really simple. I think there was a general distrust amongst the general US Americans to not trust their entire financial savings with big financial institutions, right? So at that point in time, you had this entire advent of wealth tech players who gave you a platform. You went there, answered a few questions, and it gave you a personalized portfolio, so to speak, right? Where you could allocate between different assets, domestic equities, global equities, bond funds, fixed income funds, so on and so forth, even passives as well, right? So it covered the entire gamut. If I want to look back and see how that started in India, the tipping point was the 2015-2016 eKYC through through Aadhaar and the UPI payment, which enabled frictionless payment for all of these platforms to enable investors to actually access the Indian equity markets, right? Since that point in time, over the last 8 to 10 years, yes, there has been a sea change in how companies are using AI and helping their investors actually invest better. But the modus operandi more or less remains the same, where it is a static questionnaire-based risk profiling assessment. You go answer a few questions, and then it provides you with the basic set of solution which the investor would like to invest into. But I think over a period of time, once you go towards higher up in the wealth ladder, the adoption of these wealth tech platforms actually tend to stagnate.
They fall off. Kanishk, why don't you come in on that? Because I want to understand how these platforms are currently being built, not platforms, but these programs or these services using artificial intelligence are being built. Because ultimately, what most people think of when they think of artificial intelligence in personal finance is you get asked a few questions, you respond to them. There is context that is provided by the individual. And based on the framework that is predetermined, a solution is provided to you, and this is ultimately generative AI. So it's using certain information that existed over a period of time and is responding based on the learnings from that framework. Is that how it works?
So, Alex, let's get a bit technical on this and see how the systems are designed in modern world today. You basically start with data ingestion through financial transactions, look at user behavior logs, the economic indicators. You ingest the raw data through a pipe where you pre-process a lot of these layers and perform data cleaning, labelization, normalization. And this is mainly using Python as a technology and tools like Pandas, Scikit-learn, TensorFlow, and PyTorch. Then comes model training. For budgeting, you have to have supervised learning to classify expenses. For anomaly detection in fraud, you might have to lean in on unsupervised learning techniques like clustering or autoencoders. But if you have to build something which is more conversational like finance chatbots, you have to use transformer model fine-tune on financial corporation data. Now, here is the kicker. The model themselves only do 20% of the work. The rest is infrastructure, which is basically building APIs, deploying your machine learning models in real time and creating feedback loops to continuously enhance the learning of these models and ensure compliance with regulatory norms. If you're in India, you have to comply to guidelines which come from SEBI, RBI. If you're in the European region, you have to comply to GDPR. If you are in the Silicon Valley, you have to comply to the California data protection law. But these models are grounded in financial theory, risk modeling, and also look at behavioral psychology. So today, AI is not just learning from data, it also is guided by traditional means of doing a lot of economic research, which is coded into some of these tools. Yes, it is coded, but it is operating in a manner that it enables better decision making. That's why you're fine-tuning your machine learning models on a regular and a real-time basis.
But a follow-up to that is this thesis that you have, Kanishk, in personal finance, in markets, in investing, is that while history may not repeat itself, it perhaps rhymes, but there is no guarantee that something that has occurred in the past is going to occur in the same manner, which is why equity returns cannot be plotted. You cannot guarantee returns in capital markets. And so my question to you is, if you are taking advice from an artificial intelligence program, or an application that utilizes artificial intelligence in all the manner that you've just described, is it capable of being predictive in nature? Is it capable of responding to a black swan event that could not have been predicted?
Basically, no black swan events can be predicted, which is actually good. But today, LLMs and foundational models are built by interpolation and not extrapolation. So their general outcome are based on patterns they have seen before, but they're also built on theories of risk management. Let's take the example of when Titanic got sunk. It was a black swan event, and nobody could basically say that a ship like this size would get sunk. But you could always derive theories out of it and apply using artificial intelligence and machine learning on a real-time basis today to basically see what is the probability of a black swan event, whether it is going to have high impact, whether it is going to have low probability. Is it outside the historical precedents? For example, let's think of COVID-19 or 9/11 or 2008 crisis. Now, you can't train a model on these events that have happened, but what you could do is you could use Gen AI to build hypothetical models. You can have stress testing on those models, and you can explain historical black swan events with clarity and context, and then create basically a portfolio which could impact some of these, analysis. So, for example, a portfolio, if the inflation hits 15%, or if oil drops to again 20 barrel again, how would the sector get impacted? So this is still very much capable, but there is still a very much human capability, rooted imagination, intuition, sometimes even paranoia that comes into the picture. So AI doesn't panic. And in finance, a little panic isn't always a bad thing to do. So I think you have to really feed in the right amount of data, and you have to have the right theories to be applied, whether it is theory of risk management, whether it is theory of deterrence, or whether it is theory of change management, which have to be applied given how finance is behaving right now.
Yeah, that statement, I love it, Kanishk. A little bit of panic is not necessarily a bad thing. So therefore, let me come to you, Varun, on that human element, because ultimately, from the perspective of the user, right? And you deal with this on a regular basis. I want to ask you, out of 10 times, if you were giving somebody advice, how often do they follow your advice to the T?
I would say close to 7 to 8 times out of 10, right?
Okay. And what do you need to do as an advisor to ensure that that takes place? Is it based on your intervention, or is it based on their own discipline?
So I think it is really important, let's say when we are getting into conversation with any of our clients, right? It's important to set the expectations right on day one. What you are expecting from equity market returns or fixed income returns or gold returns, what sort of an expectation do you have vis-a-vis the volatility that is going to come with investing in a market-linked product, right? The problem which occurs in administering this through an AI chat agent or a bot is who has the liability, or who does the client actually refer to in times of market volatility, right? I think that is where the intervention of a human advisor really comes into play.
But would you even look, I don't want to go that far. Before you get there, before you get to the problem that could arise down the line, isn't it true that if I was having a conversation, and Kanishk, you can weigh in on this, please indicate to me that you want to do so. I will get your opinion on this as well. But Varun, one of the first things that you do as an investment advisor or a financial planner is to sit across the table and have a conversation with somebody to understand what their desires from life are. It's not a money conversation front and foremost, right? You will say, okay, what do you want to do in your life? Do you want to retire at 45? Do you want to have 3 children, or 2, or 1, or none? Do you have dependent parents? What is your desire for these dependent parents? Do you want to live in a mansion? Do you want to live in a 3 BHK? Do you want to live in a 1 BHK? Do you want to visit Japan? Do you want to go to Alaska? These are not necessarily questions that a chatbot can rat-a-tat ask an individual, and it's not really something that is organic, my opinion. I will ask Kanishk what he thinks about this, but isn't that the first conversation that you have?
No, absolutely, right? I think if these were the questions that could be asked by any of the platforms, right, then the platforms themselves could have done pretty much all of the work, right? The legwork could have been done by them. Where the human advisor actually comes into the picture is right on day one, where, as you correctly pointed out, we are sitting across the table trying to understand the investor itself, investor's family, what his or her goals are, and what he or she is actually trying to achieve by investing in the markets. And sometimes what we have realized is investors themselves do not know what are the right questions to ask and how to actually look at the problem that they have in front of themselves, right?
Yes.
They could probably be sitting on a lot of wealth, or they could have that stream of cash flows that they could perhaps invest for the future, but they do not know where to begin with. What are the questions to ask? How could I actually channel this money into different life goals, bucket that, and then basically apply a model, right? All of those actually comes secondary, but its primary importance is to understand what exactly are you trying to achieve from the money that you have saved.
Important point. Kanishk, I want to come to you on this one, because ultimately money is something that you will use to facilitate life goals. It is a means to an end. It is not the end itself. And so therefore, from that perspective, is it important to identify the role of artificial intelligence as also a facilitator, rather than something that will give you all of the solutions, starting from asking the right questions or answering those initial questions to giving you the solution entirely?
See, today, artificial intelligence can help in solving tactical problems. And it helps users categorize, optimize spending, automate low-risk investments, and flag suspicious transactions. It also makes inroads into personal finance coaching. It can help people create better habits in terms of saving a little more at the start of the month, avoiding that third subscription of any platform which is not getting used. But when it comes to long-term strategic planning, I think that's where AI fails. So, if you're connecting your life goals to AI, you will have a large risk management that you will have to do, right? People go through a lot. It could be marriages, it could be divorce, it could be careers pivoting, it could be relocation, pandemics and recessions. Now, AI can't be made basically tolerant to all of those risks. So what you need to do is you need to develop future-ready applications where you basically have dynamic scenario modeling and ask those tough questions to AI as well, so the models are trained better. So for example, you could ask, hey, if I quit my job and freelance, will I be able to survive with my savings and my investment for next 2 to 3 years? Or it could be a cross-domain optimization question where you ask the financial AI to negotiate your rent, your cheaper insurance, and switch to better mortgages, or reallocate your ETF positioning based on certain events which are happening right now.
Yeah, okay. Important points that you're raising. So two things that I'm getting from this is, one, you need to be able to ask the right questions. Two, you need to be able to feed the right data. And so context is very important for this amazing tool to give you the right responses and solutions that you can actually use. So therefore, Varun, question to you. These tools that we're talking about, ultimately that are available to a lot of people, and frankly, it's not just personal finance, right? Incredibly, we're finding that people are asking artificial intelligence chatbots to advise them on psychological issues, which is a problem that people are facing today. And this is actually being identified by the companies that are generating these languages as well, and these chatbots as well. So we've not reached the culmination of everything that's being built right now. So with that caveat, from your perspective as an advisor, because people don't necessarily know the right questions to ask, right, how can you use artificial intelligence to solve for issues that you can't solve for right now?
So I think how we are using artificial intelligence today, obviously it has taken a lot of the legwork. When we have our initial chat with the clients and we need to get into, actually constructing portfolios for them, attaching that to the several goals that they could have highlighted to us, right? That is where a lot of the legwork is being done by artificial intelligence today, right? What could have possibly taken me about 5 to 7 days to actually go through data, right? Understand the fund selection criteria, construct a portfolio, know what the risk mechanisms are in place today. If any of the black swan events need to happen actually in the future, right? You could actually basically populate all of these things into an AI agent, AI chatbot, right? And feed what you want to actually get out of the software itself. So I think that is where AI is actually assisting us in reducing a lot of the manual intervention that otherwise would have taken place if AI were not so efficient today as it is today. But definitely on the other side of the spectrum, when we see that clients need to understand where they want to put money into the future, they they still require that human level of judgment.
You have certain scenarios in the past, and I will talk about this year itself, where you had the broader markets that dropped 20% and then they recovered 20% in the span of 4 months.
Right.
All of this took place, right? So anybody who stopped SIPs did not get the advantage of deploying funds when the markets were at their bottom this year. Right? I'm not talking about an all-time low, but I'm talking about this year. But those that continued their SIPs or deployed at the bottom were able to get the benefit of that 20% ride up.
Absolutely.
But I'm saying hypothetically, correct me if I'm wrong, Kanishk, is it possible to ask, this is a hypothetical question, something that is run by artificial intelligence, what the right response to stimuli are?
See, this is where it actually gets interesting. Today AI systems can help in improving the perception, the plan, act, and the learning over time. It is not just spitting out the answers, but basically acting on your behalf to help you better align to your goals. For example, if your AI monitors your bills and expenses are going high, and it says that should I move 500 from your checking, from your high yield saving, so that your earnings don't dip, you could basically help you cushion your rent, or should it sell basically a portion of your tech ETF to reallocate its dividend into fund? We basically need to have a better risk monitor to basically anticipate some of these answers and then look at larger signals which come out when in case of market downturn. For example, if you have to negotiate a better APR on your credit score, or you have to switch your insurance while keeping in loop the natural language updates. These are questions where AI could be better prepared, and it is continuous optimization, right? You have to basically train your large language models to be better and look at some of the scenarios where it has been done erstwhile. So the training here part plays a very, very important role. And, my colleague spoke about aspects with respect to transparency and governance. So today, the accountability factor with AI, that needs to be enhanced further. Who will be held liable and accountable? Now, none of your credit managers hold liability and accountability if you lose money or the market come crashing.
Kanishk, question to you, and then I'll wrap the conversation with Varun. In your opinion, based on everything that we know right now in the landscape, just to now draw this conversation to a conclusion, in your opinion, do you think that the landscape will shift more towards individuals and advisors using artificial intelligence to make better decisions, or do you think that there will be a replacing of certain aspects or certain links in the chain, so to speak, and there will be a change in the landscape overall?
See, there is going to be a change in the landscape overall. For example, the repetitive rule-based low context roles are going to get chopped off. Your junior financial analysts who spend their days doing DCF modeling or gathering data, AI doesn't require them, so AI is going to replace them with fewer Excel crashes. The second part is the entry-level relationship managers who come and act more like glorified customer support service agents. They would be replaced by chatbots with CRM plugins. The operational rules like document verification, compliance checks, credit reconciliation, all of them will be taken by natural language processing and computer vision models paired with robotic process automation. But roles that require high context judgment, emotional intelligence, and the ability to transform complex information into personal and human narratives are here to stay. So your wealth managers will be augmented by AI, but will not be replaced by them. They will going to spend less on grunt work, but doing more meaningful conversations rather than just driving customer loyalty and trust.
Yeah, important points that you're raising, Kanishk, and I think we're in agreement here in the studio as well. So throwing it in your court at the end, Varun, all of us in life have to skill up, right? That's the natural course. Change is the only constant and all of that. So from your perspective, is this something that you think you will have to imbibe as you use artificial intelligence and as the technology changes?
Yes, I think Kanishk just wonderfully wrapped that up, right? I think AI is going to be a great enabler. AI is going to be a great complementary tool that we advisors are going to use. But at the end of the day, judgment is where wealth advisors come into the picture, right? I think that is something that we get paid for. right? Once we have a conversation with the client, we can have all the AI do our work, but that judgment is something that really comes from experience, that really comes from knowing the individual, knowing the family, knowing the social construct that we are living in, because money means different to different people in different countries, right? What is money to you could mean something really different from someone else. So we need to understand what the money actually means to the individual, how he or she is actually planning to use that to better his financial future, and how advisors can actually make use of AI tools to complement that and provide a better judgment in the future.
Okay. So this brings us to an end, a lovely conversation, Varun. Kanish, thanks so much for taking the time. And I must say that I have wondered sometimes whether my job is something that artificial intelligence could take up down the line. Let me know what you think. I, for one, think that this conversation could not currently be done by anything artificial intelligence. But let me know. That brings us to the end of this edition of Moneywise. Thanks so much for watching. This is NDTV Profit.